Hey guys, so really excited to have Superstate Jim Fig on board as well as Ryan. I'd love to start with just a brief intro from all of us. I can start. So I'm Luke. I'm here on the Offchain Labs team. I've been leading our fintech approaches and expanding in terms of the Arbitrum ecosystem. Ryan, you want to go?
Yep, for sure. Hey guys, nice to meet you. I'm Ryan, based out of Singapore, working alongside Luke on these institutional use cases, specifically around some of these central bank initiatives in Asia.
Hey guys, I'm Jim. I'm co-founder of Superstate. Was at Compound before we launched the business, but I run business development, and a lot of my career is spent doing a lot of boring TradFi stuff, and now I get to do a lot of fun stuff here in this space. So excited for the conversation.
Guys, great to meet you. Fig here from Superstate. I lead our protocol relations, working with DAOs, foundations, and protocols.
Awesome, awesome. Well, really happy to have you guys on board. We have some exciting announcements, I think, from our side, working with you as well. So I think we have a whole agenda to discuss. So let's just get into it. I think the first thing we're really excited to announce is us joining the Superstate Industry Council. We saw some waves you had made, the consortium of folks that you assembled. We think it's a stellar all-star group, and we're excited to be a part of it. I'd love to ask you a bit more about it. Like, how did the idea of the SIC come about? And what are the goals you guys are trying to accomplish with it?
Yeah, absolutely. I mean, we're super excited to have you guys on board. We've got a lot that we're going to be able to do together, and I've already built a great foundation, and I think you're going to be a tremendous asset to the community. As I was mentioning, my background was in traditional finance, but I spent a lot of time in the fintech space, and there's a big regulation that was being rolled out called MiFID II, and the buy side and the sell side, so on the banks and the asset manager side, we're trying to figure out like how do they almost re-architect a lot of their business from a trading research standpoint. And I just saw at that stage, everybody was kind of like doing it independently instead of coming together and trying to figure out a way to move the industry forward. So I built something similar in that space to help around MiFID II, brought a lot of the large asset managers together, and it was a really effective way for folks to have, a strategic roundtable of similar people in other roles at other firms to kind of figure out how to address regime change in their business. And if you think about what's going on in finance and apply it to tokenization, this is a very similar paradigm shift in the markets. So, the idea was, bring a lot of the strategic partners that we have in our business together around both, on the buy side, the sell side, the protocol side, the infrastructure side, you name it, to all kind of work together to figure out how to best expand adoption of these types of products across various different aspects of the capital markets, whether that's CeFi, DeFi, different chains, different protocols, the different types of assets. It's been a great community that we've launched, about 6 months ago. Started with about 20 or so different members. But we are excited to announce Arbitrum alongside Hidden Road and Copper and Zappo Bank and a bunch of other really great folks that are joining us in this next cohort here, in the middle of August to really just bolster the community and continue to progress on all the different initiatives that we have and make sure that, we're helping rise the entire industry as there's a ton of opportunity, and instead of all going out and fighting the fight individually, do it collectively together.
Yeah, I think that's a huge point. Like these industry working bodies, it's not really as competitive as you would think, right? It's like folks, you are working together with them to try to lift all boats, right? It's part of the thing is there's regulation, there's things going on, and these are great use cases. So that's awesome. Very cool.
Yeah, and I mean, it really also boils down to education and prioritization too. I think there's a lot of Twitter threads and thought pieces and podcasts, talking about what's potentially, an opportunity to integrate these products, and it's all relatively high level. When you kind of like boil down to specific use cases, who the players are, what the ROI is, if you kind of contrast the existing world to what the new world looks like, you got to really do your homework. And, creating this community allows us to have a finger on the pulse of what's, going on, and also to, help prioritize focus in certain areas, whether that be integrations on certain protocols or different use cases in CeFi, or new funds or products that we should be launching. So it's tremendously helpful to kind of bring everybody together on a regular basis and kind of level set and prioritize all of that. And, in the meantime, build lasting connections that while there is a little bit of competition across the cap table or across the table of who's involved, there is, a tremendous amount of opportunity to collaborate so that this entire industry can continue to thrive.
So just to touch on that a little bit more, so how did the idea of like the SIC come about, and what are you guys trying to accomplish?
So yeah, the community was really an idea of just, instead of having disparate conversations, bring people to collectively that represent different elements of the industry, both on the investor side and, on the exchange side or the protocol side, and, work together to identify and prioritize certain solutions to bring to market different products, different services. And, it also helps as, all of the counterparties on the other side have a ton of different priorities. They're all, running 1,000,000 miles an hour and in 1,000 different directions. But as they hear, direct client feedback from not just one, but multiple clients, it helps them prioritize integrations and opportunities that, instead of hearing disparate feedback, they can collectively go inside and say, hey, this is, not something we're hearing just like as a one-off in a vacuum. This is actually something that the entire industry, that if we are pioneering, supporting this type of an asset or integrating this type of an asset or creating this, like, a smart contract around this to, optimize our operations, then, it's actually a major differentiator for them as a business. And, as they have 1,000 things on their plate, this helps rise some of those opportunities to the surface so that, the two hands are kind of speaking together and working together versus going in opposite directions. So it's both a, idea, place for people to like share ideas and like come up with new opportunities, but it's also a way to kind of demonstrate that there's a ton of demand behind the scenes to folks to be able to prioritize these opportunities.
Yep, definitely. I think that's an amazing initiative, and having the different stakeholders be aligned on some of these use cases would be super helpful in moving the industry forward. Maybe on to the next question. So could you share a bit more about the Superstate short duration US government securities fund, the USTB, that you guys have launched recently?
Yeah, absolutely. It's our flagship product. When we first launched the business, we, kind of took a step back and thought, what type of assets would be most helpful to bring on chain? As you look at the fund, it's just an exposure to treasury bills wrapped in a highly compliant vehicle that is extremely liquid, that enables investors, whether they are protocols, sitting on a treasury, whether they're individuals that are, holding a bunch of stable coins, not earning any yield, or they're, a hedge fund that's trading with a counterparty and wanting to use better, highly liquid collateral. Treasury bills, fit the bill for all three of those, just sample examples. So the fund itself is a onshore U.S. entity, basically built this, very regulated, compliant vehicle that investors or institutional investors can allocate towards. But the fund itself just invests directly into treasury bills. We sub-advise that mandate actually to a very large institution in the TradFi space called Federated Hermes. They manage like $750 billion or more in these types of assets. So, they're bringing a lot of, 30, 40, 50 years of experience, allocating a portfolio like this. And then we focus on, setting up the fund, setting up the token, doing all the KYC and onboarding for clients so that they get this, a nice hybrid version of what a Web 2 TradFi asset looks like in a Web 3, crypto native way. There's $100 million in the fund. We launched it back in April. So we're, super excited with the growth and how things have gone. We've, got a very diverse customer base, which I'm sure we can, dive into a little bit further. But once you build this building block, it creates a foundation for tons of use cases. That's what the SIC is really focused on, is like having, these types of assets be integrated like stablecoins are in exchanges, in DeFi, on this chain, on that chain, and, creating a way that it makes it super efficient for clients to be able to manage their assets, especially, in an environment where interest rates are as high as they are. Maybe they're coming down, given, where the macro environment is heading. But at this stage, like, you have a 5 handle on Fed funds rate, and that's a really healthy yield. That's a much better opportunity cost than sitting in cash that's earning nothing. So, it kind of brings these assets into the blockchain ecosystem that traditionally, were completely bifurcated between, banks and protocols. It's like now these two worlds are starting to merge together, and, allows Superstate to build all the infrastructure around how do you onboard a client? How do you, give them their reporting of their activity? How do you let them set up different addresses and, mint and redeem and transfer, do all these things that allows us to then have the platform extend to other assets and other funds in the future, which we just launched our second fund that, like, instead of taking us 6 months or longer to build the first product, like it took us 6 weeks to launch the second one. And so the foundation that we've established through that product and the product market fit there, and now allows us to expand the business to bring other assets and exposures on chain that aren't just treasury bills.
Yeah, and we'll have to chat more about that coming up. But just on the topic of USTB, you definitely, I think, hit on product market fit, and I wanted to touch on that. I've seen USTB grow very well since launch. Can you share a little bit about how you've been able to tap into that in such a short amount of time?
Yeah, absolutely. We come from Compound, so we've got a large, relationship base in the digital asset market, which have been seeking out opportunities like this, which is, what we kept our ear to the ground as we, decided to launch this business. So, we were able to satisfy that demand with a wide variety of types of clients. So, hedge funds that are maybe risk off in their portfolio, Monday ETH and BTC are down, a ton in their portfolio. And they're like, hey, I need to build up some cash.
It was an interesting experience this weekend. So
yeah, or maybe they were short and they made a bunch of money. And so they're like, hey, instead of me sitting on cash that's earning nothing, like, let's put that to work and just, put it into USTB. It's like a one click, send it from your custodian to us. Like, there's a purchase that's made, you get minted tokens back to you. It's like way better than trying to do that on a Saturday afternoon and go to Morgan Stanley when they're not going to be open till Monday and it takes them a couple of days to settle. So, that's why this product, has found a fit in that realm. Then you've got like VCs, for example, that like maybe they've exited an investment similar to the hedge fund and they're like sitting on cash before they make distributions to investors, and like, hey, I've got extra dry powder sitting around. Why don't I earn yield on it so it doesn't eat against my carry? Or maybe I, do a quarterly draw from investors and I'm sitting on cash before I go and deploy it. So again, no reason to let that sit in cash and, burn a hole in my pocket. Might as well, put it into something like this that I know that I can redeem from and be opportunistic and put capital to work into a deal. Because these assets are sitting in treasury bills. Great. Like, I'm earning 5% up until, the moment that I need to use them. Then you go like further to, protocols. We'll talk about it more, but like Arbitrum took a real look at its balance sheet to figure out how to diversify and create a real sustainable endowment, basically, for funding the protocol on a go-forward basis. And, the first step of that is trying to figure out how do you get, a highly volatile asset or other unyielding assets and diversify them into something like a treasury bill. So we found a really good fit there with multiple communities that are being, good fiduciaries and highly responsible from a financial perspective to allocate their balance sheet into something like this where, it extends their runway, so they can earn more yield or more return on the cash that's otherwise sitting there doing nothing, pay for more grants, fund more operations and so on. But, have the liquidity to it whenever they need it. So, that's where we've seen a lot of the growth has been largely in the crypto native communities. You can imagine, some of them don't have bank accounts or don't have the access to these types of products, or they're focused on doing other things than buying a bunch of T-bills and rolling them a 15-day, 30-day basis. So they outsource that kind of stuff to us, who's an expert in it, relying on Federated, for example, to manage the portfolio. So we've seen a lot of demand, and we continue to open up new jurisdictions as well. We started with just US, we've got BVI, we've got Cayman, we've got other regions that are coming online in the Middle East and Asia that we're going to be able to expand globally, so that our clients don't just have to be in certain regions, but they fit that same mold and sit in other areas of the world where, access to treasury bills is actually super challenging. So that's kind of been our trajectory thus far. And again, just very much cliche, tip of the iceberg of where this is all going to go.
Yeah, I think, I definitely love that you guys were able to tap into both the crypto natives piece, also the institutional side. I find that, it was a pleasure working with you guys, and DAO spoke very highly of it through the STEP program. I really like that you guys applied. Congratulations, first off, being chosen by the Arbitrum DAO to be a part of the STEP Stable Treasury Endowment Program. It's a mission to help diversify the DAO into more stable assets that also have a yield component to it. I want to ask you, what was it like working with the DAO? Also, basically talk about your application. How did you guys stand out in that process as well?
Yeah, I'd love to jump in. First off, I think we're so excited to be part of Arbitrum and that ecosystem. STEP was a model for many current and future programs in investing into these sorts of products. We've seen MakerDAO just announce $1 billion proposal modeled after STEP, and actually highlighted by some of the same reviewers. Athena is doing something similar where they actually borrowed the same questions from STEP. So for us, this was an awesome opportunity to let people know about our product and do so in a very public way. We gathered a lot of information from our fund materials and documents, our PPM, our investment agreement, and put that out into the wild for the public to see. What I enjoyed most was the range and the diversity of the reviewers. You have people who are focused on smart contract risk. You have people who are focused on legal risk. You have people focused on yield and capital efficiency. So Superstate and USTB really benefited from people looking at this product on a holistic view and seeing what it can contribute to treasuries, to DAOs, and different ecosystems. So I think while we stood out, we were very lucky to have a great yield profile. Our yield net of fees is fantastic, and liquidity as well. And just our crypto native background, being really willing to work with these sorts of ecosystems like Arbitrum and committing to doing client service in a very public manner.
Yeah, I think we were very intentional even before this program came out and how we structured our business. As we decided to create an asset management company, we decided to maybe climb the hardest hill, which is do it in the US, which is pretty contrarian compared to the more crypto native peers, I would say. But as the US is the largest financial system on the planet, and we've decided to create not only a highly compliant and rigorous business on the back end, but to Fig's point, very transparent. We are, I think, as throughout the process, we demonstrated our willingness to open up all of our books on how the fund is structured, how the counterparty risk is mitigated, and where the asset management is being built, what the flow of funds look like coming in and out. You can go to our website at any time, and now you can use Chainlink Oracle to pull all of the holdings and the pricing associated with the fund. So trying to be as Web3 as possible and as crypto native as possible with our willingness to be transparent and demonstrate the rigor that we put into structuring the business in the first place, so that we can be a strong partner for these ecosystems.
That's great. Having spoken with various ecosystem partners, do you feel like there's a need for treasury diversification across DAOs, and should more DAOs be looking into this?
I love a quote from, I think, Steakhouse, like, your treasury should not be valued in its native token. And I think this weekend was an example of that. Very quickly, you can be devalued and your future seems uncertain. I think this program woke a lot of people up to the products that exist to create a more sustainable financial future. I think this program woke people up to new sorts of products and new sorts of yield profiles, which haven't existed before. I think this program woke people up to compliance and sustainability and being very intentional about your DAO's decisions. I think now being in a situation where you can access asset classes which are uncorrelated to crypto, which offer you different risk profiles, it's a much healthier way to think about your treasury and your runway and helping you grow an ecosystem. Obviously, the short-term needs, you got to pay contributors, you've got to pay infrastructure costs and service providers, but there's also long-term goals and sustainability. And having a mix of these products, I think, helps you achieve growth.
Yeah, for sure. And I think it really stood out. You guys were thoughtful about your approach, coming to the STEP program. And we love to see that Arbitrum was an example for that. And we hope to see more proliferation, especially in the diversification space, getting into more stable assets that are transferable here now. That's one of the things. So is there any advice you might have towards teams that are looking to be a part of that next iteration of STEP that you would share?
Yeah, I'd say, for other issuers that are looking to engage with the community, continue to take a, highly transparent approach. There are multiple angles that Fig was alluding to earlier that go into consideration in terms of the legal structure, what the type of assets are, the visibility into it, the liquidity around it. And I think, it really takes there's an efficient frontier in, capital markets, which I think, a lot of these ecosystems will continue to push up the curve. And I don't anticipate people going all the way to the other end of the spectrum and taking like highly illiquid, highly risky positions, because that's just not financially responsible. At least I hope that that's the case, that, folks continue to the acronym STEP is fantastic, because like step 1 should go to step 2. It shouldn't go to step 100 after step 1. And so I think, teams that are looking at this space should really understand from the client's perspective, that being the DAO, what are they invested in now? How do you help them diversify? And, not only diversification, but also ALM, was asset liability management. What are the financial objectives and resource constraints and needs that a particular DAO has? Now, that might be different for Arbitrum versus other communities. And so this assessment has to be done in a bespoke manner, and really custom tailored, as if you're a financial advisor, kind of going into talking to an individual about what their investment policy statement should be. That is the first step to all of this, and understanding, all of those different elements, and designing a portfolio that helps achieve those objectives in the most, efficient way.
We'll have to give Devansh some credit for coming up with the name, right? STEP, not bad. I'll have to get him on this podcast too later on. So that'll be exciting. No, that's great to hear. Okay, so we've talked about, your first core product, USTB. I think that's, obviously done very well in the space, found its product market fit, not only with institutions, but DAOs. I know you guys have recently launched a new product. Could you share more about that?
Yeah, we're super excited about it. We, take a step back as we've been bringing USTB to market, having that conversation that I described with clients, what are you trying to achieve, from a yield, liquidity, exposure perspective, and, how does that align to, your business, whether you're a fund, you're an individual, you're a protocol, you name it. And, what we found is that, especially for the crypto native audience, there's a tremendous, interest in getting higher yield. But also maintaining liquidity. These markets move really fast. So people love Aave and Compound because you can go in and out of positions and earn yield, but then you also have the liquidity associated with it. Not everybody is, willing to, set up a a position in some of these protocols. But that type of demand for both yield and liquidity is something that we just heard constantly. So as we got further along in our process, we kind of look back at what opportunities could fit that mold. And everybody has heard of the basis trade, and if you haven't been in crypto long enough. But it's one of the most persistent yield opportunities in these markets. And part of the reason is because crypto loves leverage. And so the basis trade is a way to arbitrage or to take advantage of the difference between the future price of an asset and the spot price of an asset. So taking Bitcoin, for example, let's say that you can buy Bitcoin at 55,000, which I think it's trading at right now, and sell forward in a month from now, Bitcoin at 60,000. That $5,000 delta between the spot price and the future price gives you a nice spread that you can predictably earn as yield over the next, call it 30 days. That type of opportunity has persisted for the last, decade in crypto, primarily on Bitcoin, but also in Ether and other assets. So what we created was to package that opportunity into a fund. Market neutral, so you have, offsetting positions on the long and short side. An actively managed strategy so that when the yield makes sense, that spread is wide enough, you go risk on. When that yield is not wide enough, you just go back to cash and you go to treasury bills and you wait for it to come out. So that is a pretty choppy chart with our boom and bust industry that we're in terms of volatility of asset prices. So what's really nice is in a strategy like what we built is that you have the downside protection that when the spread comes in and the yield is no longer high, you just go into treasury bills and you earn the 5% or whatever it is, Fed funds rate currently. In addition, we've got another lever that we pull in this fund, which, the ETFs don't have, which is you can stake the ETH in the fund and earn additional yield. So we have kind of all these different moving pieces that, we manage to make sure that we're generating, a good return for investors, but also managing the downside volatility and taking advantage of all the capital in the fund to earn yield where it makes sense. So you don't have ETH or cash sitting around doing nothing. You're staking it or you're putting it into USTB so that you're earning, the T-bill rate. All of this is set up so that you're not dealing with any of the volatility of markets. Again, these are market neutral positions. So looking at last weekend's activity, just because it's, right in our rearview mirror, our fund heading into the weekend was long basis. And as the spreads came in, you had offsetting positions on the short and long side that allowed you to not have, exposure to delta or to market risk. And we were able to close positions, earn additional yield, and then reestablish those when the basis widened out again. So, we're managing this with no leverage, with, daily liquidity, but it's got this really nice, alternative treasury asset for clients that are looking to not just park, call it, 50% of their cash in treasury bills and 50% of it into something that's super illiquid and high yield. They can now do 50-50 or whatever the, right percentages are for them in something that's going to earn 5% sitting in treasury bills and something that is earning a higher yield, but still they have access to when they need it. So we're super excited about it. It actually, brings Superstate into a totally new paradigm in terms of the types of assets that and infrastructure that we're building. But it also, despite it having a different investment strategy underneath the hood, it's structured in a compliant fund. We do KYC for all of our investors that come into the fund. There is a token that can trade on the secondary markets as collateral or to settle or integrate to protocols, just like USTB can. So you can get some interesting use cases around stuff like that. But you have for real true institutions that want to understand who they're investing in or where they're putting their capital, it's not going into a protocol, but it's going into a fund. And a fund, it's structured with a Delaware trust. It's, onshore here in the US, and it has all of those protections and mechanisms around it that, I think addresses a serious, large institutional audience that might not feel comfortable with just investing in a token. And those are two divergent paths of products, market fit. But, we're excited to take the more institutional approach and bring this to market.
Yeah. This is really cool. I actually used to work in the commodity space, and this type of trade, the basis trade, exists in other places, right? It's not just
Oh yeah.
here, but Bitcoin futures you mentioned here, but also I used to do this with like crude oil and soybean futures and stuff like that. Except the interesting thing was the markets weren't in this. It was you're actually losing money every roll.
Yeah.
So it was quite different because commodities, you store it. It's kind of you just pay a lot of storage costs over time. Bitcoin obviously doesn't have
Bitcoin,
that.
we've got Anchorage. You've got
Yeah.
Anchorage. You don't have a warehouse full of barrels of oil. So like there's a
Yeah.
big difference between the two of those.
Exactly. It was really cool
Yeah,
to
just
see it
the whole
come up.
concept of like a cash and carry trade or a basis trade, you're exactly right. Like it's the phenomenon in terms of the consistent yield profile that exists in crypto is pretty crypto unique. But the overall like plain vanilla strategy of taking advantage of the dislocation between spot and futures is not specific just to crypto, but it exists in other commodity markets too.
Hmm. And you guys
Wow,
have
weekend.
yeah. Let's that's a different one. That's one that people pile too heavily into, maybe.
Yeah, that's a different carry trade.
Yeah. But I was gonna ask, so for you guys, like you're working with trusted folks that are executing this for you, right? They're all like, vetted by your team and
Yeah.
well,
Yeah, so like we've got multiple trading partners that we are able to execute this strategy through rigorous due diligence that's performed on our end to make sure who we are putting these positions on with are highly trusted and robust counterparties. And we continue to diversify and add new venues so that we're always striving for the best partners to put our investors' capital into. Because at the end of the day, this is not Superstate balance sheet. This is investor capital. So, it's our responsibility to ensure the highest quality on the other side. In terms of custody, yeah, we used Anchorage as our custodian. We love them. They're fantastic. They've got multiple opportunities. Not only do they have a qualified custodian, as an investment advisor here in the U.S. Like you have certain limitations in terms of where you can keep your assets, but Anchorage is fantastic. They also have the ability to stake directly, through there and multiple other other options of things that we can do in the future. So, we're really excited about the infrastructure partners that we put together with the Anchorages of the world, and then the Falcon X's, the Flowdesks, the Galaxies of the world, and onboarding a few others as well at the moment to put all this on.
that's amazing. And I feel like that's one of the main differentiators for you guys. So that's really cool to hear. Okay, so I think we covered a bit about Superstate, the products you guys have. I wanted to make ask you some viewpoint questions. Ryan's come up with a good list, so I'll let you take the first one.
Yeah, for sure. So one interesting metric I came across recently was there is almost 27 trillion in outstanding treasury securities, outside crypto. However, that's not the case when we look at some of these on-chain metrics. According to RWAs, we only have about 2 billion in treasury on-chain. What do you guys think needs to be done for us to bring more of these tokenized treasuries onto the public chains?
Yeah, it's a great question. We are so ridiculously early. I think, a lot of the industry has been, very excited, ourselves included, to cross the $1 billion mark. But in terms of total AUM in tokenized treasuries, but it is, somewhat laughable when you compare the 5 trillion that's sitting in money market funds today that, pales in comparison, that makes, our industry right now pale in comparison to traditional finance. I think what you're seeing though is the use cases around, these assets is what's bringing the demand. Exposure is one thing, and there's, a decent amount of clients who don't have access to these types of products. And so therefore they require, a product like ourselves that's, onboarding them to be able to get them exposure to something that they don't have access to. But when you look at like traditional finance, like they're not trading in these these crypto markets yet. And so when you think about use cases, like we have a lot of crypto native trading shops and VCs and hedge funds and whales that are all, interacting on, these various DEXs and C5 venues and whatever. But, the volume that you look compared to traditional capital markets, again, is also very similar. It's microscopic. And so, I think as we continue to demonstrate, through efforts that the SIC is putting together and, and others across the industry, not just, looking at Superstate, is to show large asset managers, large banks, large family offices, large, custodians, that their business model can be completely re-architected on chain because of the speed and transparency associated with tokenized assets. That stuff takes time to transition over, but you have to demonstrate real tangible use cases in order to continue to bring the Citibanks of the world onto a blockchain. They're all doing this, and they're all running these case studies as well. So I think, this convergence between the two is happening, but it's just going to continue to take time. And these things don't happen overnight, especially when you deal with very large institutions. And, you have to really do your homework and peel back, what does the legacy system look like versus the new system, and, come up with a roadmap to getting there. And that's a lot of the effort that the SIC tries to do, starting with our own echo chamber of crypto native, institutions on the exchange side, on the protocol side, and you name it. But yeah, there's really no advantage to having a tokenized treasury if you're my mom. She's just going to hold treasuries at Fidelity until there's reasons for her to be able to use that to move things really, really quickly, and to be able to diversify maybe, her portfolio more systematically versus, I'll give you an example. We just moved money personally from PNC to another account, and it literally took them 6 days to move $2,000. It's laughable when we all look at this inside of the four of us on this call. But then you tell it to my parents, and they're like, oh, well, that's normal. So these things, it's just going to take time to continue to develop, and really demonstrating that hey, the capital efficiency associated with posting less collateral because you can move it instantaneously means that a prime broker in the traditional capital markets can do a ton more volume with their clients than they're currently allowed to, because a lot of stuff is just sitting in a bank account as collateral with huge haircuts on it because it moves so slow, and therefore, in order to mitigate risk, their counterparties require them to just put a bigger buffer in there. It's just how it works.
Yeah, no, totally. I mean, the only way to get things across instantly is a wire transfer, and you're paying $25 out of your pocket to do that, right? So
even that only Monday through Friday, 9 to 5.
Yeah,
so
totally. Yeah. This is 24/7, like it or not.
Yeah, especially when markets move around like they do on, Sunday night, we're all going to sleep and Japan's down 10%. I'm sure a lot of people were freaking out, and that's a lot of the uncertainty that bled its way into the equity capital markets, is because the VIX spiked up to 60. It's okay, people were just buying a shit ton of put options thinking that the world was falling apart. And part of that is just because things couldn't really move until, 9 a.m. things woke up, and then you saw the VIX come back down to mid 20s. So this stuff, if it's working 24/7 and can move instantaneously, I'm sure a lot of that type of vol will go out of the markets. And that's why you contrast what happened in the traditional markets, originations in the credit market just died for 48 hours. Maybe they're back open now, but you look at DeFi and Aave and Compound and, Pendle and Uniswap, all these guys, they just constantly were working, moving risk around 24/7 and keeping clean books, which doesn't exist in TradFi. And that kind of stuff will just continue to demonstrate its resilience, such that products like USTB and USCC can bring not just crypto carry trades and treasury bills on chain, but everything on chain.
Mm-hmm. Yep. Speaking of DeFi protocols that you mentioned, another interesting take I wanted to ask you guys is how important do you think is merging sort of tokenized assets into the utility of being able to do things on chain through, DeFi or even other means, maybe commerce or gaming or things like that?
I think they're huge. As Jim alluded to, this expands investors' utility. It expands the universe of what you can do with these assets and how you can garner even more capital efficiency. I think for us, and Jim feel free to correct me, but we're sort of looking at three types of protocols. One is an exchange, getting investors more liquidity on the weekends, on a daily basis. Two is lending, using yield-bearing assets as collateral and borrowing against these assets. And then three is perps and derivatives. If you're going to do a derivatives trade, why not earn yield while you're sitting in this trade? So we're looking at a ton of protocols which are on Ethereum, which are cross-chain, omni-chain, and hoping to get involved there soon.
It's why we launched Superstate. Like, we sat, watching Robert's invention of compound work throughout all these cycles in, a highly efficient manner, and looked around at each other. We're like, this just doesn't make sense to only have Bitcoin and Ethereum and, a couple of crypto native tokens on it with, $10 billion of TVL or whatever the number was. And like, it should be trillions of dollars, and it should be every asset on the planet. And maybe it doesn't all exist in a, permissionless, anon-degen type of world. And maybe, this stuff can be upgraded into the financial system so that like custodians and banks and asset managers and family offices and, market makers and you name it can all benefit from this tech. That's why we built the company that we built, so that we could take, the things that exist off chain and bring them on chain. And, ultimately, I think things will just be originated natively on chain anyways, and not need this bridge to like go from the legacy world into the new world. Eventually everything should be launched on a blockchain and be tokenized, be fractionalized, be liquid, be accessible 24/7. But the, bringing a token onto the blockchain and just having it sit in your wallet is great if you want to be able to see your assets in a holistic view. Like, I got Bitcoin, Ethereum, and USTB. Great. Like, I'm easy to know that I've got $10 million sitting in my, wallet. Great. Some of it's in crypto, some of it's in treasury bills, but it's the utility of that to like go immediately out of USTB and swap it out of DEX for BTC, like when the market is puking like it was this weekend, and use it as collateral that like, that if the market pukes, treasury bills are going to be fine. So like, you have really high quality stuff that's sitting there that allows you to borrow and predictably finance your business or your trading or whatever it is for a longer time. These systems are unbelievably important. And that's why like launching an ERC20 token is kind of different than some other, ways that people tokenize assets. But there is a reason why ERC20 tokens are the most, widely adopted thing on the planet, in crypto. And so like, we wanted to do that to give ourselves a composable Lego brick that like can go anywhere subject to compliance constraints.
Yep. Token standards has been a key topic of discussion across different tokenization providers. I want to get your thoughts on, what's the current state of RWAs, and, what are some of the challenges that, being one of the first movers you guys are facing, and potentially what needs to be done for greater adoption. SIC is a good start, but curious still on what else is on the roadmap.
Yeah, well, I think it has to be demand driven. And I think that's some of the problem with, RWA projects historically has been like, we could tokenize this and it's like, great, but is there demand for that? And what is the use case for that? So that like, that's why SIC is also really important for us to like have that pulse on the demand side versus just say, yeah, we can originate, the art on the wall behind my head. Like, that doesn't really do anything unless anybody wants to buy it. By the way, not a real Basquiat, so nobody wants to buy that. But we, I think the real thing is like, KYC and identity and onboarding, like there's like still this friction for RWAs because you do have like regulated instruments underneath the hood. So like, you've got this fragmentation of the industry where like everybody has to onboard with everybody, and certain things take longer than they should, and it should just be much more accessible. That would be ideal. I think, secondary markets is going to be huge because then, it actually demonstrates you can go to a pool and see, oh, if I own some USCC, I could post it as collateral here and borrow whatever asset to do the other thing I want to do. That type of stuff needs to mature and continue to grow. And then I think like the regulatory environment, we, I take a very US centric approach in what we're doing. I think we're very encouraged by a lot of the engagement that's happening, not just from the crypto native side of the industry, but also the traditional players like the BlackRocks and the Franklin Templetons that are doing amazing work to help like further the opportunities where, we have a treasury bill fund. It's the safest asset on the planet. And I'm sure that our government would love to sell as much debt as it possibly could, but we can't sell it to everybody that we want it to because it's tokenized. Like we are restricted to US qualified purchasers and BVI and Caymans and some other regions. But like, again, going back to my mom, she can't put $100 into the fund, even though the risk is the same as holding a Fidelity money market fund. So those types of barriers, I think, are something that will continue to come down as, more and more highly sophisticated, high integrity teams like ours are building products like this that engage with the bodies on the other side to show like, this isn't as scary as you think it is. And it's actually, where the world is heading. So let's continue to like collaborate on how to make that happen.
Perfect. Yeah. All right. Well, to close it out, I wanted to ask you guys, what's next for Superstate? Is there anything you can share more broadly about your future roadmap? Perhaps Arbitrum coming soon?
Yeah, I mean, we're on Ethereum mainnet right now for the clients that choose to tokenize our funds. We actually do offer the option for people to not tokenize. So for those non-crypto savvy folks that just want to get exposure to the funds that we have, like you certainly can. But we have an omni-chain view that based on client demand, we're going to continue to expand our products across the Arbitrums of the world and other chains and other protocols, so that we're able to like bring our products to where clients want them. I think what we demonstrated with launching our next fund is that, we have seen real appetite from clients to get multiple products from an issuer, which is not shocking. They want to have multiple ways to diversify their balance sheet across different types of products. So, stay tuned. We'll continue to innovate on other types of structures and strategies that give people the type of exposure and allocation that they want to have. And yeah, we'll continue to expand internationally. I think, we started earlier this year, just US investors, and like, here we come to, a city and town near you as we like, expand to the Middle East and Asia and bring more investors onto our platform. But one of the other things too, by the way, going back to what I said about like the friction on onboarding, we used to use a third party for maybe the first 4 months of the business. And while it allowed our clients to onboard to our fund, to our platform, it sucked. They know who they are, but it was not great. And so we decided to build our own in-house proprietary tool. And so we've like reduced dramatically the friction for clients to be able to like get into the system. Like you have the documents ready to go, you put it in, you are done in 30 minutes. It's not a, try 4 times, spend 6 weeks going back and forth with a huge negotiation and all that. Like we are taking very much a direct approach to try to make that friction as low as possible. So for those out there that are like, hey, this sucks doing onboarding on all these different platforms, like come to us. It won't take you long. And like, those are the types of tools that we want to launch so that it's a really, really clean and nice experience for clients, not just on the investing side, but like all the way through from onboarding to their transaction activity, to like administering their accounts, to onboarding new stuff, to buying new things, like switching from one fund to another. Yeah, we've got a lot cooking on that, like just client experience side, because I think that's super critical too.
That's super cool. I love actually those stories when you like kind of just build a product because you're like, there's a need for it, and that's gonna, make the user experience better. And yeah, totally. So it sounds like you got a lot cooking. You got international expansion, multi-chain, and yeah, potentially more products. So that's really cool. We really are proud to be a part of this Superstate Industry Council, and we look forward to working with you guys, as partners.
Yeah, no, we're super stoked. Thanks again for the opportunity, and Luke and Ryan, this has been a pleasure. Sorry, Fig, I hogged the mic as I probably always do.
No, know the story best. Luke, thanks for having us, and Ryan, great to meet you.
Yeah, great having you
Likewise.
guys.
Thanks.
Thank you guys.